One, welcome to a Wednesday afternoon. I posted a chat in the chat. Please, if you can have a look there, please let us know where you're joining us from. It's always interesting to see how far we stretch this webinar in this virtual environment. Natasha, I see Mossel Bay is in the house. Letitia here close by in Roodepoort. Michelle, Strydom in Midrand. Hello, everyone. It is indeed getting very dark here. I see you've got the same there in Rosebank. Sure, a lot of people. Welcome, East London. Alistair Smith, Renal from Bloemfontein, Duplessis Attorneys. This is a close one. Tasha Robertson, welcome. Good afternoon. From Nelson Borman and Partners. June Brimmer from Pretoria. Danny Botsy in Roodepoort, also close by. We've got KZN in the house, someone from Newcastle, Lusabam. Good afternoon, Benoni. Otaniqua. Remax in George. Candice in Randburg. It's just bumping. It's good to have you all on board this afternoon. Grahamstown, Pam Golding Properties, Emerensha from Sanlam in Bellville, also Cape Town. I believe it is very cold in Cape Town. And like someone just said, it's also getting very dark here in Gauteng, in the Johannesburg region. Hello, Candice from Lowen Coetzee in Cape Town. We've got Sharon from Lowen. Oh, Sharon, you jumped there. We'll quickly find you. Smith & Co. in Cape Town, Durbanville. Amanda from Springbok. You're all welcome. Welcome to Themba Mafareka from Adgor Blue in Kempton Park. I see there's a delegation from Nelson Borman in Randburg that have joined this afternoon session. Good afternoon, Lizelle. So a delegation of Adgor Blue. Lesego from Broll Property Group in Sandton. Welcome. We also Josna Govender from Tim de Toy in Linwood. Our recent visit still in our close memory from last week. Malmesbury, beautiful place. So Mosselbaai, East Rand in the house, someone from Benoni earlier on, and we have people from Brakpan as well. Right, the numbers are still steadily growing. I'm just going to give it a few seconds before we start off the session. We only have an hour, and there's a lot under discussion today pertaining to foreign nationals. So I'm going to kick it off with the formalities and welcome everyone to the online webinar this afternoon. We will be diving into important and a very timely discussion, and that is the Financial Intelligence Centre's requirements for screening of foreign nationals in South Africa. In a world where financial transparency, compliance, and ethical due diligence are more important than ever, understanding how you navigate FIC obligations, especially in the context of foreign nationals, is essential for professionals across sectors. Whether you're joining us from a regulatory body, a professional institution, financial institution, private organization, your participation today reflects a shared commitment for complying and responsible governance. Throughout this session today, we'll unpack the legal framework, examine practical implementation strategies, and clarify key guidelines that ensures adherence to fixed standards. You'll also hear from seasoned experts who bring valuable perspective down from real-world experiences and regulatory developments. So thank you for joining us. We look forward to an insightful exchange, and we encourage your active participation throughout the session. I'm joined today by my esteemed colleague and partner for the series of the FIC webinars, Cedric Effendi from Masthead, who will be taking over from me. We will also go into the foreign identity search functionality in our KYC solution, and thereafter we will have a Q&A session. There will be a few polls that comes up as we go through the journey of this webinar, just to get some further information and insights from the delegates who are esteemed that has joined this afternoon. Cedric, over to you. Let's get started.
Thank you so much, Melinda, for the introduction. Great spending time with you again. It's always a pleasure. Thank you for the wonderful platform that you create to create awareness around this very complex but important piece of legislation. And as you've mentioned, it's only in collaboration with all accountable institutions that we can achieve what is necessary for us as a country, specifically focusing on our next challenge, and that is hopefully to be removed from the grey list. There was communication sent out that we were visited by the Financial Action Task Force on the 29th and the 30th of July. They have now gone back to their headquarters. They will compile their final report, and we will have our findings presented to us in October. So we're holding thumbs so that we can be removed off the grey list. Just on that, I get a lot of questions, and I have been getting these questions over the last couple of days. Cedric, what happens if we come off the list? Are we okay? Are we finished? No more RMCPs, no more updating. Ladies and gentlemen, unfortunately, that's not the case. Getting to a point of being technically compliant is one thing, but maintaining and being measured on outcomes of how you've implemented this is completely different. So we need to maintain the standard that we have created in our organizations. So thank you again for the opportunity for this webinar session. The last webinar session we had, the people that reached out to us, that we were able to help and guide through this very complex situation, giving them guidance and helping them to become FIC compliant. And we hope that by everybody joining here, that those of you that need assistance to please reach out to us. So what we're going to look at today, what accountable institutions should know about foreign nationals, risk-based approach under the FIC, and then, of course, a comprehensive guide to navigating the regulatory requirements when onboarding and monitoring foreign nationals under South African Financial Intelligence Center Act. So if just the agenda, understanding the risk-based approach, what does that mean? Enhanced due diligence, customer identification verification. We'll look at red flags, suspicious transaction, record keeping. And I'll just share a very, very quick case study with you, practical scenario of a media release that happened on the 25th of April, 2025. So let's start off with looking at foreign nationals. When this whole thing started, it was very simple. If you had a foreign national, yes, you were required to screen them. You needed to make sure certain things were in place. And then as we got onto the grey list, there was changes that came into effect where you need to take several things into account if you deal with foreign nationals. Not as simple and as easy as it's been before. You need to, for an example, know exactly where, of course, this foreign national is coming from. The reason for this is that certain countries, as you know, are posted on the grey list or the blacklist even. And if you're dealing with foreign nationals from higher jurisdictions, it's not just about doing the minimum. It's actually about going a little bit further when it comes to verifying and identifying these individuals when it comes to onboarding. And that's very, very clear from a regulatory point of view, and how the FIC communicates this to us via whether it's a guidance note or a PCC. So foreign nationals in general, if we look at it, particularly those from high-risk jurisdictions and complex financial footprints, posed a distinct higher risk within our organization. Dealing with complex juristic legal entities in foreign national countries, you're going to have to delve in a lot more deeper than you've done before. Also, depending on which country you are based in. Currently, South Africa is on the grey list. If you want to deal, if a UK, for an example, an EU company wants to deal with a South African company, we go through, whoever the legal entity is, we go through a very intense due diligence process in order for that organization to feel comfortable to work with an institute in South Africa. And in order to make this process easy, we definitely need to use some form of automated platform like LexisNexis has now given us the opportunity to do so. Otherwise, this becomes a manual exercise. And can you imagine the complexity of running around a manual exercise, trying to identify and verify these people, doing enhanced due diligence, digging deeper? It becomes really, really, really complex and really difficult to do so. Okay, so if we look at the slide, as I've mentioned, if we look at foreign nationals, higher jurisdictions, or with complex financial footprints, pose elevated risk to money laundering and terrorist financing within South Africa. Okay, so it's important to know, first of all, which country these individuals, of course, come from, doing the necessary to find out, is this country even part of the Financial Action Task Force? If this country is not part of the Financial Action Task Force, because not all countries is, that just increases your due diligence that you need to do. Because at least if you belong to the Financial Action Task Force, there's a form of, there's certain things that you should follow to help prevent money laundering, proliferation financing, terrorist funding within a country. We're sticking to a certain standard. Okay, so in 2017, the amendments, of course, was made, and then in 2022, the general law amended the act, places specific legal duties on accountable institutions to identify and manage these risks. You really need to go and think about who your client base is. How many foreign nationals do you deal with? Where do they come from? What is the purpose of doing business within South Africa? And most of the times it will require not just your average due diligence, but delving a little bit more deeper to try and find out who these people are. So what we will do, I beg your pardon, today we'll examine the risk-based approach, enhanced due diligence, verification challenges and red flags, reporting, and we'll look at real-world cases, unfortunately, where accountable institutions did not comply with these specific regulations. Unfortunately, we don't have time to discuss each and every section. I'll only make reference to, for an example, Section 21H, to break those down. Those type of webinars can be done completely on their own. So understanding a risk-based approach. Okay, so firstly, if you had an RMCP which you have deemed to be compliant, in February of this year, Guidance Note 7A was introduced, which means that after February, your RMCP needed to be updated again to allow for certain things to be added. So under 7A, it brought in we've always had the business risk assessment, but now it talks about you now need to go and look at the inherent risk that were there, go through a specific exercise, and then we'll look at the residual risk. So what did I have in place before? Did I have anything in place before? Let's look at foreign nationals, for an example. So I deal with foreign nationals within my organization. What did I have in place to identify and verify who these people are, which countries they come from, what is the nature of their business, their source of wealth, source of income. Okay. I didn't have something in place. So I went through a process. As part of my process, I've implemented a due diligence process. I've introduced automated screening through LexisNexis that helps me identify and verify via the platform the actual foreign national. So the inherent risk, because what I have put in place has now been mitigated. So we had a business risk assessment that was introduced last year. Now we need to even expand on that. And that really is a discussion with somebody from a consultation point of view. Even though we deem ourselves that we know the legislation, we help implement RMCPs, we guide people, we in ourselves cannot do that exercise on our own. We do not know your business. So it's a collaboration between different parties in order to get to a solution. But there's a big focus on the actual business risk assessment. And please go and have a look at Guidance Note 7A if you have not done so. Please reach out to us also if you have any questions or concerns. Then it also had some changes were made relating to Section 21F and 21H, which applies to foreign politically exposed persons. So that in itself is a different change, because yes, we have foreign nationals, but then we also have foreign politically exposed individuals, which automatically needs to be seen as a high risk individual. And if you're talking about high risk individuals, we're definitely talking about performing enhanced due diligence. We need to look at the types of products that these people are going to use, the services, the types. We need to really delve into this. And the reason for this is one needs to sit back and have a look how my organization can be used to launder money, to either fund a terrorist or proliferation financing. And I always say this with every webinar session that we present, doesn't matter what platform we use. Please do not think that this cannot happen to you. I have too many conversations with people where they say that something has happened. We need to do the necessary, and it needs to be a collaboration between all of us to protect our democracy. Those of you that are familiar with Pacta Tara, which are very much similar to the FIC Act, talks about each and every South African having that responsibility. Section 21 requires identify verification. Very important. However your process looks is up to you, but the identify and the verification is always there. And ladies and gentlemen, please, please be careful to rely on third parties when it comes to identify and verify. And you as an accountable institution don't take the ownership of doing it as well. You cannot discharge your responsibility to somebody else. Hence the fact that you are a accountable institution. Okay. Also under that, the ownership structures, shell companies, offshore trusts. These are high-risk products. Identification, verification, crucial. And then we look at Section 21A requires, as you all know, ongoing due diligence. And unfortunately, there's where a lot of accountable institutions fall short. You need to implement a solid process relating to ongoing due diligence within your organization. Depending on your business risk assessment, which filters down to a sectoral risk assessment, and then actually bringing it down to how you risk rate your own clients within your own matrix based on a holistic view of what your risk-based approach would be. All of these things needs to be documented in your risk management compliance program, detailed step by step in such a way that a 16-year or a 15-year-old needs to pick up that document and understand exactly how that process works. Because as an organization, from a FIC perspective, you will be tested on that document and the processes that is followed within your organization. Delivery channels, remote or cross-border onboarding. Also a big focus on that. How does onboarding happen? How do I engage with my clients? How frequently do I engage with my clients? Face to face? Is it via email? Is it via telephone? What are the risks involved in my business when I don't deal with clients face to face? What am I going to put in place to mitigate the risk? Definitely some form of screening, at least. And if you need to do enhanced due diligence, means you're going to have to require additional documentation as well. And then institutions must document their risk assessment process in their risk management compliance program, RMCP. It is a legal requirement to do so, step by step by step. We see this more and more and more when it comes to the actual audits that we sit in, that they are looking for detailed explanations on how this works. So we can't just go and put in there foreign nationals. We need to go and step by step put in there, how am I doing and how am I approaching, how am I managing the risk when it comes to foreign nationals within our country. And again, want to highlight the fact you need to know what countries are on the grey list. It's very simple. Go and Google and you'll find out, and make that part of your process. It's going to make your screening so much more easier as well, especially using the LexisNexis platform to do so. So what is enhanced due diligence? When and how should I do that? Okay. This also has evolved, I beg your pardon, since 2016, where it was, you would get more documents. For low risk, I would get certain types of documents, for an example, a copy of an ID or proof of address. Medium, I would add maybe some information relating to SARS, and high risk, I would get all of these things certified. But if we now look at some of the changes and we look at enhanced due diligence, which also come up in guidance note 7A, and we look at section 21F, it talks about enhanced due diligence when that needs to be done, is that senior management approval before establishing the relationship. Verify source of funds and wealth, conduct enhanced ongoing monitoring as well. Very, very important. So when dealing with these type of individuals where enhanced due diligence is involved, we need to talk to senior management. Because ultimately, the people that are accountable for FIC within an organization, as we know, is the board of directors. We have senior management that support that. We have a FIC compliance officer. Again, just on the FIC compliance officer, guidance note 7A now also talks about business continuity plan. So if something happens to that individual, what is the process to appoint a new person? So again, RMSP needs to be updated. So we need to take reasonable steps to identify a source of wealth and source of funds, conduct enhanced ongoing when it comes to these relationships, especially foreign individuals and foreign politically exposed persons as well. Specifically referring to Section 21H, even the family members linked to foreign politically exposed individuals should also be seen as higher risks individuals within the organization, which means that there needs to be some form of enhanced due diligence. We need to dig a little bit deeper. On that, very important, I get this question as well. What if information that I'm requesting is people don't feel comfortable sharing it with me, or they don't want to share it with me? Ladies and gentlemen, if somebody doesn't want to share information with you and it's documented in your risk management compliance program, that it's part of your due diligence and your enhanced due diligence, the Act clearly says that you then unfortunately need to walk away from that relationship. That's why it's much easier, much practical to try and establish that what the relationship will be about, how it works, explaining to the people, asking that these type of information will be asked of you to provide in order for us to build whether it's a single transaction or a business relationship. Please be careful for that. Please don't compromise on if your RMCP says this is the information that I want, that you get that information, because you will be tested, especially when doing file sampling. Also, as I've mentioned, foreign politically exposed people. Definitely enhanced due diligence, family members, close associates. Please look at Section 21H. High risk foreign nationals, sanctioned countries, inconsistent finances. All of these things are triggers to perform enhanced due diligence. Identify, verify, know who you are doing business with. Okay. If we look at practical EDD components, enhanced due diligence, what should I take into consideration? Number one, deep source of funds verification, contracts, financials, tax returns. Ask for these type of things. These are just examples. This is just giving you some guidance on what it is that you can do or need to do. As mentioned, senior management needs to sign off on these type of things, including the FIC compliance officer within the organization. External database screening, PEP list, sanction list, adverse media. That's why we have platforms like LexisNexis to help us do this, to make it more sufficient, to make it more credible. I think that's the most important part, to make it more credible. Legal ownership verification, Section 21B, if you look at the compliance, and as I've said, ongoing monitoring with periodic reviews and alerts. Depending on the risk assigned to the customer, whether it's a natural person or a legal entity, you as an organization will decide when you will do ongoing due diligence. Of course, the higher the risk of the individual, the more frequent ongoing monitoring should be done when it comes to reviews. The lower the risk, you can expand the time. Just be careful not to push it to the limit. It needs to be within reason. The FIC Act doesn't give you a clear guideline, but that's why we do a business risk assessment to determine how vulnerable are we as an organization for somebody to use it for unlawful activities. Verifying and identifying beneficial ownerships, always a tough topic to discuss. Because we also get a lot of things where people say, it's very difficult for me to get this information. People don't want to give it. That's why what we try and do is try and use automated systems to try and identify and verify, which at least make it a little bit more easier. But what we need to understand when it comes to identifying beneficial ownership, if you look at under Section 21, institutions must verify and identify before establishing relationships with foreign nationals. Best practice include the following. Bear in mind, you might deal with a South African company where you're shareholding that there's foreign nationals involved as well, which again puts that legal entity that you're dealing with in a little bit more of a higher risk than if it was just, for an example, South Africans. Okay. So it includes the following. We look at ICAO, compliant biometric passports, you get notarized translation, address validation, foreign utility bills, embassy letters, review of legal structures, trust corporates, vehicles, which we can use. Please remember the beneficial ownership. If you have beneficial ownership of 5% and more, you must be identified and verified. Less than 5%, still fine. Some of the countries that have been placed on the grey list have, based on the findings from the Financial Action Task Force, is now down to if you have 1%, you need to be identified and verified. Most people that I deal with, due to the 5%, have made a decision that they will just do everybody. I'm not saying that must be your approach. I'm saying most people that I do deal with do that. Remember, it talks about controlling and voting rights. People that have a say, people that can have influence when it comes to certain transactions within an organization. And if you look at PCC 59, emphasizes that signed declarations are insufficient. Proactive verification is required. Proactive verification is required. The FIC Act clearly states, before entering into a business relationship or a single transaction, there are certain requirements that needs to happen. Screen, identify, verify. And from there, the business makes a decision to continue with the business relationship after you have done that part of the due diligence process. It's very, very clear. Be careful to do these things after the fact. Remember, everything you do has a timestamp, and you will be measured against that, especially within file sampling. Okay. Let's look at some red flags and suspicious transactions. What is very important here, and we've seen this in audits as well, where whether it's a supervisory body or whether it is the FIC themselves doing it. What will happen is we now frequently see that let's assume that the FIC comes in and they do an audit, that they do a lot more interviews with staff that they've done in the past. One of the last audits that one of our clients had, they had a staff complement of actually 12 people. All 12 people were interviewed over the period of 3 days. Now, I know you're thinking, what does this interview entail? This interview entails that all employees need to understand how is FIC embedded within their organization? So, of course, that should be documented in your risk management compliance program, which all staff must have access to. However, you decide to give them access, again, is your prerogative, how you want to do it, whether it's shareholders or whether it's mailing. But what we are seeing is that the FIC is asking organizations, hence the fact that LexisNexis wanted to point this out as a prominent thing to discuss, is what are you as an accountable institution doing to help your employees identify suspicious or unusual transactions? How are you guiding them? How are you giving them some examples so that they become aware of the fact that if something is wrong, this might be suspicious, I need to follow the relevant steps. So the interviews are based on what is documented in the RMCP. How does it practically work? How does my reporting line works? What screening do we use? We use LexisNexis screening. Where do you screen foreign nationals? We use LexisNexis. How does your onboarding look when it comes to foreign nationals? Do you do an enhanced due diligence? Yes, we do. How does your reporting lines look? Who is your FIC compliance officer? So it's practical questions. It's not, please quote paragraph 2 on page 58 of the RMCP. It's practical. So let's look at some red flags when it comes to suspicious transactions, which of course should be reported. With that also is something that we refer to as suspicious activities, because a transaction might be, of course, suspicious, but there might also be an activity. Going back to what I said in the beginning, if somebody doesn't want to provide you with information for whatever reason, surely something is up if they can't give you a legitimate reason why. And they can't quote other pieces of legislation. I think that's also very important. There's no other piece of legislation that trumps what FIC requires you to do, especially when it comes to privacy. FIC requires you to do certain things. If you can't do it within an accountable institution, you unfortunately need to walk away from that. So, multiple small deposits followed by large international transfers. I mean, like that might be suspicious. Transactions from sanctioned high-risk jurisdictions. That's why it's very important to know one of your risk factors, definitely in your business risk assessment, should be geographical locations. What countries do you deal with? Are you only working in South Africa? If you're working abroad, what countries are you dealing with? Are they on the Financial Action Task Force list? Are they even part of the Financial Action Task Force? Okay. Evasive explanations regarding sources of funds. Being completely, for an example, you know that when you're asking somebody for source of funds and somebody, and I've had this before, and because we're talking about real situations as well, where somebody's reached out to me and say, what do you think? And it's very difficult to give an opinion. I can give an opinion, but you don't have to follow it, where source of funds, and this individual said, but I rent one of my rooms in my house to my sister, and I'm charging her 40,000 Rand a month. It's not for me to say that that person is not telling the truth, but I remember thinking the first thing, I hope it's got an ensuite. 40,000 Rand a month for a room. Apply your mind. Some of these things are, I know these days, common sense isn't common sense anymore, but some of the things are just common sense. And at that moment in time, I'm not saying stop the transaction. I'm saying there might be a reporting obligation now. Wealth inconsistent with declared income, use of a shell companies or multiple layered structures. The more complex as a juristic entity is, I'm not saying it's suspicious, I'm saying it needs to be handled in a certain way with certain due diligence, certain respect, having an open mind, not going in being a conspiracy theorist, but being open-minded, knowing who I am doing business with, especially if it's new clients. Clients you've had a relationship with over years, a little bit different. It's not to say that something can't happen there, but that's why we also need to distinguish between, is it an existing client, is it a new client, which forms part of our business risk assessment. Okay. It's a really intense exercise, ladies and gentlemen. It's not something that happens quickly. You really need to go and apply your mind. Reporting requirements. Section 29 requires filing suspicious transaction reports via the GoAML portal when a suspicion arises. STRs must include rationale, documentation, and risk assessment. Institutions must not inform the client about the report. Please, if something happens where there is a report that's going to be submitted, please don't tell the client. Okay? Please just carry on with the business. The FIC will guide you. Okay? I also get the question sometimes, Cedric, when should I report? I have also asked the regulator this question several times, and the answer always stays the same. And it's the same answer that I'm going to give you today, ladies and gentlemen, and that is, when in doubt, report. Rather be over cautious. Okay? When in doubt, report. It's just a report. It's anonymous. Nobody knows about it. Nobody knows it's you that's reporting. It will be dealt like that. Go and read in the act. You will never be required to testify in court. None of those things. So when in doubt, report. Okay? From a Masthead point of view, we of course have a lot more examples relating to what can be suspicious, because it's a big thing for the FIC, asking accountable institutions, what are you doing to help your employees understand what a risk-based approach should be. Then, if we go to the next one, looking at record keeping. Record keeping, again, we are used to the fact that we must keep records 5 years after last transaction. That's the quick answer that people will give you. That is 100% correct. 5 years after last transaction. There's some other things relating to record keeping, and it's one of the 7 pillars of compliance, which is very important. So everything that you do with that client, every transaction that you do with that client, firstly needs to be kept on record. Okay, any transaction that you do. But then also, if you look at section 22, it talks about all the documentation that you used to identify and verify the client. That also needs to be there. The source of funds verification. How did you do that? What was your process? Do you have a questionnaire? What was the evidence provided in order to, determine source of funds, source of wealth? That needs to be there. That might be 1, 2, 3, 5, 10 pieces of documentation that you keep. Definitely, of course, your screening. The nice thing is about using platforms like LexisNexis when screening is that there's also a record there. You can't, however, rely on that. You are responsible to make sure record keeping is part of your organization. You are the one accountable for that. The assessment that you did, your risk assessment, now specifically focusing on whether it's a legal entity or a natural person. You need to have that assessment where you've risk rated them. And then, of course, if you have ever submitted a suspicious transaction, a cash threshold, or, of course, if there was any terrorist property involved. So it's basically keeping all information around that client's transaction, everything on file for record keeping purposes. What is also very important is the ongoing due diligence that you do should also be on that file. The screening that you do. Remember, there's certain trigger events where the FIC says if there's certain changes that happens, especially if there's an update on the TFS list, that's a trigger event. Screening needs to be done. That's why it's becoming, doing these things manually is becoming very onerous. Having it automated saves a lot of time. So we'll definitely see an increase in screening and when it should be done. That needs to be kept. Transactional records, when you do transactional due diligence, that should also be kept on file. So the more information you have on file, the better. Also, the information, the actual documents, ladies and gentlemen, should be in good condition. Okay. Also, when we talk about identify and verify, the quality of the document should be of such a way that you can at least identify that individual. If you've got on file a copy of somebody, of an ID document that you did 20 years ago, I suggest you make a plan because that copy might have faded depending on how you keep it. So FIC clearly says copy of an ID, make sure that you can see the forehead, the nose, the mouth, and the chin clear. Okay. Identify and verify. The quality of the documents is extremely, extremely important. Okay. So on that, if you use third-party record keeping, please make sure you use reputable companies, ladies and gentlemen. Don't just use anybody, because wherever those documents are stored, there's necessary protocols that needs to be in place to keep that document safe. If you use a third-party record-keeping organization, you also need to inform the FIC. If something goes wrong there, you are still you will be held responsible. You are the custodian of that information. And the big reason for having that information and keeping it in good condition and as much as you can is if there's ever any issue that pops up and there's an investigation and you might have dealt with that client, the FIC will ask you for that file. Not because you are in trouble, because you dealt with that individual. You might have followed all your steps, but that individual was clever enough and bypassed all your systems. Now something has popped up. FIC did their homework. They realized that as an accountable institution, you dealt with that individual. They will definitely request the file from you to build their investigation. Okay. So very important. Please make sure record keeping is of a high standard. And then I did mention 5 years after last transaction. That's how long records should be kept. After that, you can destroy it, of course, in the appropriate way, as set out by the Protection of Personal Information Act. We know that when we destroy documentation, that it needs to be destroyed in such a way that it can't be put back. It can't be must be destroyed in such a way that you can't put it back together. And if it's information that is kept electronically and you need to delete it, then you need to delete it in such a way that it can never be retrieved back. And then lastly, want to share a case study with you. Absa Bank 2022, you might have heard, but the media release was only now released in the 25th of April 2025. Now, I know some of you think it's a bank. Yes, it is a bank, but clearly FIC also communicated that, yes, in the past, your bigger accountable institutions were the ones there that were money laundering was more prevalent and easier to do. We have now seen statistically that people that want to launder money or engage in unlawful activity are using medium to smaller organizations to do so. So don't think it's Absa. Don't think you won't get a visit, because they know from a national risk assessment perspective, the FIC, that the areas of concern are now to medium and smaller accountable institutions. Knowing that they need to focus on those accountable institutions to go in, to do audits, to check and see, do they have the necessary processes and procedures in place to mitigate risk in their organization when it comes to money laundering, terrorist funding, and proliferation financing. So I've got the document in front of me. I'm going to highlight some of the things so that you can see the importance around what it is that we just discussed. You can go and get the media release, the full report, and go and read it yourself. It's public information. So, of course, the Prudential Authority is a supervisory body from a FIC perspective. So what we want to do is the Prudential Authority is mandated, of course, to supervise and enforce compliance. So what they did was they had an audit done by the Prudential Authority, and unfortunately, things didn't go that well. So the administrative sanction imposed on ABSA are due to failure to comply with certain provisions of the FIC Act and consist of 2 cautions: not to repeat the conduct which led to non-compliance. Okay. Penalty, of course, of 10 million rand was imposed on them. So where did they fall short? So ABSA failed to fully comply with Section 21(1) and 21(a) of the FIC Act. And that talks about adequate customer due diligence and enhanced due diligence when they did file sampling. That's number 1 on the list. Then, failure to adequately conduct customer due diligence on customer due diligence on 4 of its, as we just discussed, prominent public officials, FBPOs, clients' files, and 2 of its politically exposed persons, which is PEP, in respect of state-owned enterprises. That's only 4 files. Okay. Failure to adequately conduct enhanced due diligence on 3 of its domestic prominent influential persons, and DPIP's client files, and 5 of its FFPO client files. Okay. That's why having screening tools are so important to help you identify who these people are. Okay. Then they, of course, imposed just on that areas of non-compliance. They were fined 7 million rand. And it all had to do with due diligence and enhanced due diligence and identifying foreign individuals. And then also, it failed under Directive 5 of 2019. There was 8,559 reported automated transactions, monitoring systems alert were not timeously attended to within 48 hours. You've got certain timelines to do that. 4 of non-reportable ATMs alerts and 2 non-reportable suspicious transactions relating to not doing it within a period of 15 days. Because of that, there was 3 million rand added to them. Okay. So they really do take these things very, very seriously, especially from an due diligence, enhanced due diligence perspective. Okay. Please have a look at your business risk rating, business risk assessment. It is crucial. It's documented in Guidance Note 7A. We hope that in some way or form, please reach out to us. We will gladly assist where we can. Thank you so much for taking the time to listen to me. I wish you all the best with this journey of implementing all the requirements by the FIC Act, and I hope you have a lovely day. Thank you so much.
Thanks so much, Cedric. We will now move over to the slot where Helen will showcase the foreign identity search onboarding and the Lexus KYC platform. Helen, over to you.
Thank you so much. Sorry, excuse me. Thank you so much, Melinda. And good afternoon, everyone. And thank you again for joining us. And thank you, Cedric, for your wise words. We as LexisNexis are extremely pleased to introduce the upcoming release of the Lexus KYC Foreign Identity Verification, which will be launching on the 13th of August. Our solution is designed to help organizations, accountable institutions such as yourselves, confidently verify foreign identities while remaining fully compliant with the international data protection standards. So we just want to clarify that this is a verification solution, not a search facility. The distinction is essential, and the system is built to confirm identity details such as name, address, and contact information that's already been provided by the individual. Does not allow for open-ended searches or data exploration, which ensures we remain aligned with the principles of the General Data Protection Regulation, or the GDPR. In addition to verifying our identity, address, and contact details, your customer's identity information, the solution will also allow you to perform sanction screening through integration with the KYC World Compliance Search. This means you can instantly check whether an individual appears on the FIC TFS lists and additional global watch lists and sanction databases, an essential step in mitigating risk and ensuring regulatory compliance. With our solution, you can streamline your onboarding and due diligence processes while upholding the highest standards of privacy and data protection. So let's have a look at how this works. I'm doing this just as a caveat on our test environment because I've just mentioned all the privacy rules that we have to comply with. So all this data is I want to say foreign data. It is data that we put into the system in a test environment so that we can demo this for you. These are not individuals that are living. So you will be logging on to Lexus KYC with your Lexus KYC credentials, which are also your Windeed credentials. So you'll pop your email address in and your password, and you will log in. And from there, you will land on our customer management dashboard, and you will proceed to customer onboarding, and you will click on add for an individual. You will then select the country that you want that your client identity he has told you is in, and you will then select the identity type. So each country has different identity types. So it will prompt you for those various identity types, and you will then complete their identity number. So you will put in the identity number that your client has provided you with, and you will click on next. Once we go onto the next screen, it will then prompt you and advise you that we're going to do the KYC identity, address, and contact verification. So we check all that information in one, and you will opt in to do the World Compliance Sanction List check as well. So that is an optional one, and there is an additional cost. We will show you the costs shortly. So you will see the identity number has come through, and you will then put in the date of birth for your client, and you will put in the name and the surname. So the name and the surname are used with World Compliance as well as to match the data. So like I said, it's a verification solution. So the details that you provide, it will go and check against those and match them. It won't come back and say to you, no, that person's name is incorrect, you're missing a middle name. So it's just purely for verification purposes. The name and surname fields are optional, but they are preferential so that you get the best verification of your data. If you do not have address or contact details, you can proceed just with the identity verification. However, there's no cost difference in that because all the search facilities are preloaded and pre-verified. So you will then put the address information in. And please just remember, this is the address information and the contact information that their country of origin has. So they need to list what they have. They need to provide you what their country of origin has on file. So you will see that there are various mandated fields with an asterisk next to them. So you would complete those. Things like province and country. Brazil, because we selected it first, is already pre-populated. The province is an optional field. Obviously, the more information you give it, the better the vetting and the verification. We will then put in the contact details, so mobile numbers, phone numbers, and email addresses. Again, the details that are captured by the country of origin that you are verifying against. Just to mention, while the data is being completed, you will, when you log into Lexis KYC, there is an automated guide that guides you through all of our searches. So if you're unsure on how to populate a particular field, like putting the plus sign in, we will have automated guides that guide you through that, over and above our online training that we do provide. And you will see below that we specify the costs. So if you had unticked the world compliance verification, that cost would not come up. So we are upfront with our costs. Before you do a verification, you will know what the costs are going to be. We're now going to verify, and we are then going to proceed. So now we can see Juan Carlo's profile, and we can see that it is saying KYC incomplete. So this profile summarizes all the tabs across the top. And so because it's incomplete, we now need to go and see what the problem is. So we're going to click on identity, and we see that Juan Carlo's name is matched with the Brazilian authorities, as well as his date of birth. So that part of the search or the verification is correct. If we go to contact information, we see that the address information is incorrect and not matched. So you are able to manually verify this and load that upload that documentation into our documentation tab, which we'll go to shortly. So that if you are audited, you are able to say, we couldn't match it there, but we do have documentation on hand. Our world compliance tab has now gone and checked against all the various sanction lists, and it's found similar names, but you are then able to expand to see why are they listed, match up the names, see if there's a potential link because there's a family member, that's why it's brought it up. And once you've gone through all this information, you are able to then determine that this is or is not your customer. Remember, it's always at the end of the day, you have to determine whether it's your customer, and you need to have sight of this. We cannot automate this for you. You need to provide the final eyes on the prize. Once you have verified whether it is or is not your customer, it will then allow you to onboard the customer. Just quickly to show you our history tab, we record everything that you do. So if you are audited, you are able to show your audit history of when everything was done. And on your documentation, on the documentation tab, you can upload your various supporting documents here. So, and in fact, even put an expiry date on to remind you that the document has expired or not. Once you've gone through all of this, you are able to onboard your customer, and it will then say to you that your KYC, enhanced KYC, is complete. And we do provide certificates if you want to go and download your PDFs. We have a KYC certificate, the identity report, and the world compliance report. It will bring it up, and it will then confirm all the information that is loaded in the system, and you can print that out and put that on file. So it is a little bit small, but just to highlight there that the identity details are there, the address, contact information, and the world compliance details are all there. So you are able to print that out and store it on file. And then just to finally show you our Pendo, and this is where we mentioned previously and in the chats that we have all our past webinars and training and demos on site. So please just remember the little Pendo button when you log in, and you'll be able to access all our previous webinars, and we will have this demo up for you, and this recording, as soon as it's available, will also be uploaded into Pendo, into the Lexis KYC solution. So we'll be bringing up 2 polls shortly, and please just indicate if you are not yet registered for Lexis KYC, please contact us and indicate there. And if you would like to discuss our batch screening options, we can do for you clients, employees, trusts, foreign identity verifications. We can help you if you don't want to sit and do them one by one by one. So please just indicate on the polls if you would like us to contact you. Thank you very much. And I'm going to hand over to Melinda and Cedric now to go through some of the Q&As.
Thank you so much, Helen. We do have a few questions. I see 5 currently, Cedric. I think the first one, I'm going to read it out, but I think it needs some further clarification and discussion. So I'm happy that we get the details and we can tie you back to the customer or the delegate. Hi, Cedric. I'm currently conducting a multinational commercial investigation involving Singapore-listed entity and Chinese SOE that holds 7% in a South African-based mining business. I'm going to identify the foreign national representatives who are appointed as directors in the South African mining company. What would be the best advice on the which route should I go about it?
Yes, I think there's a couple of things there. I would love to give you a concrete answer now, but firstly, I don't know what's documented in your RMCP. I think that's most importantly because something like that should be documented in there. I know we don't always think about it, but again, we need to think about those things. So what you can do is thank you for the question. Maybe flesh it out a little bit more, give a little bit more content, and then we can guide you appropriately on what it is that you need to do in order to have a successful transaction at the end of the day. But your thinking is correct relating to identifying and verifying those individuals. Very important.
Thanks. What happens after a report has been filed? We have reported and never heard from FIC again.
Okay, good question. Get that a lot as well. Okay, the FIC has a 10-day turnaround time according to their SLA. So if a report comes in, they will look at it immediately. If there's something serious that they pick up based on their records, they will get back to you in 10 days, and then they will direct you further. Most of the time, you will probably not hear back from them because they don't deem it to be so, serious at this moment in time. So if you don't hear something from them, don't be concerned. That's what I wanted to say. Okay, it's you will sometimes hear, sometimes you won't hear. Okay.
Penny asked, when you rent a room for 4,500 per month to a foreign national with legal asylum status, must it also be done? And I gather that it would be the foreign identity screen.
It must. Yes, I know. And you might be thinking, you might now be referring to that 5,000 Rand, which FIC talks, but you still need to know, yes, there is, you might be exempt from certain requirements because of the amount, but you still not exempt from identifying, verifying, and screening that individual.
I get some questions with regards to costing. Penny will definitely reach out to you and discuss costing. Another question here. How can one verify the details of an asylum seeker if they have not received an South African ID as of yet? Lisa, I think I can answer that question. Asylum seekers is one of the offerings, the verification of the asylum seekers is one of the verifications that we provide through our Lexis RefCheck platform. So I'm also going to ask you just to pop your details if you want to just send it through to us on this chat. Then we will contact you and we can discuss how we can help you with this specific requirement. Tanya Berry said, if you do a sanction screening on a customer, is there an alert function in Lexus KYC that can alert you if your customer gets added on a sanction list? So Tanya, great question. Although currently re-KYC or the alerts is a manual function, it has been placed on a priority list for scoping. And we hope that we can launch an alert system, but that will enable to flag you whenever there is changes to the sanction list or the TFS list in order to allow you to be able to do bulk screening of your customers. So please look out. We will send communications through to our customer base and notify you of any changes. As I said, this has been identified as a priority item. Then anonymous attendee asked, how do you do EDD on a bond that is automatically high risk due to the value?
Due to the value, again, we'll have to go back to the RMCP. If one looks at a risk based on whether it's a natural person or a legal entity, one can't just simply focus on the size of the amount. It's not a holistic view. You need to determine that that person might be able to afford that. If it's a extremely wealthy individual that is well known and source of funds, and he's purchasing a home for 100 million rand, it doesn't automatically mean that that person is high risk. It might fall in his scope in order to do so. So we can't just purely look at the amount. We need to take various factors into account in order to come up with a holistic view regarding the risk rating. I hope that makes sense.
Thanks, Cedric. A question from the chat. With the check doing will compliance, do we still need to do UN search and TFS? Will compliance is a search that has got the UN and the TFS list as part of the 125 plus data sources that they search upon. So not only do they do the UN and the TFS list, but they also provide you with PIP, as well as other predominantly watch lists and screen and sanction lists as well. So yes, it does include the short answer. See a lot of please contact me. We will take that down. Does FIC provide for accountable institutions to bill compliance fees on billable hours basis? And is there a recommended price list?
I have no opinion on that. I hope that answers it. Okay, I have no opinion on that. None whatsoever.
That's the questions. I'm just going to give it one more round. I think that covers all the questions. If there's nothing else, I want to again thank you so much, Cedric, for always being able to help us and educate us. This has been a very insightful session this afternoon. So much fruitful thought. Looking forward to our next round of webinars. Please have a look out for that as well. And for those of you that are traveling, please be safe and hope to speak to everyone soon. Have a great afternoon. Bye, everyone.
Thank you.